2026 Warning: BlackRock's predictions for the future. 2026 is not just another point on the timeline. It is a convergence point for global markets, political realignment, demographic shifts, and a technological explosion that will change the way the world functions. BlackRock, the world's largest asset manager with more than $10 trillion under management, has issued a series of forecasts, advisories, and forward-looking risk assessments that outline how the world may look by 2026. These predictions are not based on speculation or entertainment. They are based on capital flows, data modeling, institutional risk management, and their advisory work with governments, central banks, and multinational corporations. BlackRock's predictions matter because BlackRock doesn't just watch the global markets, they help shape them. Through asset allocation, sovereign advisory roles, and broad influence over corporate and national financial direction, they sit in a unique position where economic observation and economic engineering overlap. So when BlackRock suggests that 2026 could be a year of systemic transition, it becomes necessary for investors, workers, and everyday citizens to understand what that actually means. Why BlackRock's outlook matters. BlackRock is not simply a company with opinions. It is a global financial organism that interacts with the world economy in real time. With advisory connections to central banks, government treasuries, pension systems, and global financial regulators, their predictions act more like structural roadmaps than forecasts. BlackRock's analysis influences the decisions of institutions that control trillions of dollars in circulation, interest rate policy, energy strategies, and industrial production. What they see coming for 2026 is a break from the old model of growth. We are not heading back to the economic environment of the 2010s, where low interest rates, cheap capital, and frictionless globalization created a stable framework. Instead, BlackRock anticipates something they call a new economic regime, a model defined by structural inflation, reduced global trust, fragmentation of trade routes, and competition for natural resources and computing power. This environment is not hostile, but demanding. Those who adapt will succeed. Those who cling to old models of economic behavior may fall behind. The new economic regime. BlackRock's first major claim is that the low-interest era is over. They forecast that central banks will maintain interest rates at structurally higher levels than the last decade, not because they want to, but because they lack alternatives. Governments worldwide are carrying record debt loads, and inflationary pressure has proven far more persistent than predicted. BlackRock believes that interest rates cannot return to pre-pandemic levels without risking a collapse in purchasing power, runaway currency devaluation, or systemic instability in the bond markets. This means the financial world is entering a period of slow growth rather than expansion. BlackRock does not forecast dramatic global recession by 2026, but instead anticipates plateau economics, where growth exists but is not evenly distributed. Some countries will expand due to demographic strength and resource capacity, while others will stagnate due to aging populations, energy dependence, or geopolitical constraints. This new regime favors strategic risk-taking over passive waiting, AI, automation, and the future of work. One of BlackRock's strongest predictions is that artificial intelligence will displace, transform, or restructure large segments of the workforce by 2026. They estimate that up to 30% of existing job roles may be impacted in ways that permanently alter wage structure and employment distribution. Contrary to fear-based narratives, they do not predict the elimination of human labor. Instead, they foresee a restructuring of how labor interacts with productivity. Rather than replacing all workers, AI will automate repetitive workloads and create hybrid roles that combine human oversight with automated systems. Industries most affected may include logistics, customer service, manufacturing, administrative support, legal research, finance, and healthcare diagnostics. The winners of this shift will be workers who reskill early. The losers will be workers who assume their industries are immune to change. The corporate response to automation will not be uniform. Some will adopt aggressively, others reluctantly, but the trend is unavoidable. The digital economy is not the future, it is the present. BlackRock's 2026 thesis states that the digital economy will be the backbone of global commerce. However, They clarify that we are not referring solely to technology companies like those of Silicon Valley. They refer to the digital transformation of legacy infrastructure. Manufacturing will be digitally coordinated. Logistics will be algorithmic. Finance will be tracked through tokenized systems. Healthcare will rely on advanced data-driven diagnostics. Even farming and agriculture will incorporate satellite pattern recognition and climate modeling. Digital infrastructure becomes as essential as roads, electricity, and water. BlackRock predicts that companies failing to digitize operations will weaken. This includes not only corporations, but countries, municipalities, and institutional frameworks. Data becomes the competitive advantage. AI becomes the leverage mechanism. Cloud infrastructure becomes equivalent to industrial territory. In the digital age, computational power becomes the new oil. Where BlackRock is moving money. Institutional capital is increasingly shifting toward private markets, real assets, and technological infrastructure. BlackRock is prioritizing sectors that benefit from resilience rather than speculation. They are increasing exposure to resource-backed assets, strategic minerals, energy distribution, semiconductor manufacturing, renewable capacity, and robotic supply chains. Public markets still matter, but they no longer represent the full picture of economic growth. The most significant wealth expansion may occur in private markets, where early investment captures disproportionate upside. Real assets, such as energy grids, water infrastructure, and data centers, are expected to rise in demand because they represent the backbone of civilization. In an age of geopolitical uncertainty, high-level infrastructure becomes valuable due to necessity. Meanwhile, emerging markets with demographic expansion, particularly in Asia, Latin America, and parts of Africa, may outperform aging Western economies whose populations are shrinking and whose entitlement obligations are rising. Geopolitics and the shifted world order. BlackRock forecasts that the geopolitical world will not return to pre-2020 dynamics. Globalization will continue, but not under the same structure. The assumption of a unified world market is gone. Instead, trade corridors will reorganize. China and the United States will continue decoupling strategically, even where trade continues economically. Europe will grapple with energy dependency and industrial competitiveness. Russia will remain a wild card with resource leverage. India will ascend rapidly. Africa will be courted by global powers seeking long-term partnerships and mineral access. This fragmented world does not guarantee conflict, but guarantees competition. Supply chains become strategic assets. Energy security becomes national defense. Computing hardware becomes state power. Nations that control resources, data, and semiconductor supply will control their futures. Nations dependent on others may find themselves negotiating from positions of weakness. Digital money and the transformation of currency. BlackRock predicts that financial systems will undergo a transformation in how value is stored and transferred. This does not necessarily mean the elimination of cash, but the expansion of digital settlement mechanisms such as central bank digital currencies, stablecoins, and asset tokenization. Tokenization enables fractional ownership of assets, instant settlement, and cross-border liquidity without the friction of legacy systems. The shift to programmable finance is not speculative. It is already underway, and by 2026, the infrastructure may be unavoidable. BlackRock is not simply observing this shift, it is participating in it. Through partnerships, platform development, and allocation structures, they are preparing for a world where digital value exchange is standard. This could change how everyday people invest, save, spend, and interact with banking infrastructure. Those who adopt early may gain new financial advantages. Those who resist may experience reduced optionality in the economic system of the future. Risks identified by BlackRock. BlackRock outlined several risks for 2026. Persistent inflation, interest rate volatility, supply chain disruptions, demographic decline in advanced economies, and geopolitical fragmentation. They also identify systemic financial vulnerabilities related to sovereign debt, underfunded pension systems, and asset bubbles in unproductive capital structures. These risks are not predictions of collapse, but warnings of instability. BlackRock promotes preparation rather than panic, adaptation rather than avoidance. What individuals can do. Individuals must recognize that passive assumptions may not work in the new regime. Preparation includes upskilling, strategic investment allocation, geographic flexibility when possible, and the development of financial literacy. The future economy rewards adaptability, not tradition. The middle class of the previous generation was built on stability. The middle class of the future will be built on adaptability. 2026 is a crossroads. BlackRock's predictions do not guarantee catastrophe. They guarantee transition. They mark the end of a chapter, not the end of the story. The question is not whether the world will change, but who will change with it. 2026 is not a countdown to crisis, but a countdown to transformation. Those who prepare may thrive. Those who wait may struggle. The future is not decided, it is built. If you like this content, don't forget to like and subscribe. Stay aware, stay awake. This is Felix. See you next time.